So let's jump back. We were going to jump into the natural gas is what we
Oh,
just
yeah,
bought here.
yeah. Oh, my God.
So we have natural gas, the EIA inventory numbers coming out today. 295 almost we're trading at right now.
Okay.
So the 11 a.m. spreads are going to line up pretty close to where that is, since we're trading pretty close to where 295 is going to be the price point going to the positive, to the negative. I like it. Let's put the positive one on the right. So we're going to be buying this one, 295 up to 315. And selling this one. So you're looking at $26. Not bad, right? You know, you're talking about $26, 26 ticks of these being $200 pies, because 20 cents, right? Going from 295 to 315. And let's just take a look at where it's been trading.
Yeah.
So about 293 to 295 jumping around this morning so far.
Okay.
And we would need 2.6 pennies, so about, you know, maybe 3 pennies, call it, away from 295. So when we're up to 298 about here, or 292 down here, becomes kind of a profitable.
Okay, so let me take a look at this thing. Because gas has moved quite a bit, man. There's no doubt. CRB. Oh, natural gas. So natural gas. Now this will be a little delayed one, and this is the August contract. Is that what we're dealing with too?
No, we're looking at the July, I believe.
Okay, that's good.
But yeah.
Okay. This will give me an idea anyway.
Oh, definitely.
Okay, so. Okay, so this is okay. Let's go back to that, because this is a confirmed ABC down, man. Oh man, this wants to go break the 290 level. That's what it looks like to me. So
okay,
we'll go back there for a second. So that would be saying that.
And sorry, where are we trading at on that contract? 296.6. So if you think it's going to the 290, then this contract will probably be going even lower than 290.
Yes.
Just to put things in context, right?
And this is the July contract. Okay.
Yeah. Yeah. And so again, you know, we can take a look. We're going to go to break in about 60 seconds, 90 seconds. And these are the two contracts again. And since we're slightly below 295, the negative one's going to have a little bit of value, right?
Oh, okay, so that's you know, I'm not going to take this trade.
What did I just do?
Okay, you just hit it.
I did.
My muzzle.
Oh, yeah.
Okay.
You did. Okay.
We got it.
Yeah, we did. We decided to make the trade.
Yeah. Okay.
Well, that's good. We got $24. Let's see, 10, 8, 15. Yeah, $25. So 2.5 pennies away from 295.
Right. Now,
perfect.
See, and that's why, folks, when you're on this platform, keep that mouse right.
Right? Oh, for sure. For sure. Because I think I was trying to refresh it, and I hit place order.
Right.
Yeah.
Not the end of the world. But would also
you could have closed it out for a loss of like $4 or $5.
Which is
just
fine.
to put right.
No,
exactly. You know, you just
which is fine.
Out. Yeah.
Which is fine. And when you know you're going to do something, just do it quick on the other side.
And you're right. Well, take the other one now, because that's a decent trade. There's not a lot of premium, and we're right next to the point.
No.
So hey.
Stay right there. Tommy and I are coming right back, folks. Dow Industrial's down 105. Nasdaq is off 85. S&Ps are 18. It's going to go after this B point, folks, on the Nasdaq and in the Index 100. We're going to be right back. Welcome back, folks. Let's go take a look at natural gas. Just went from $2.95 to $3, and we'll explain. We had to do this really quick. We'll explain
just blow it up,
what we did out here. So we had both sides of the trade.
Yeah, we put on two contracts, too, on each one, on the break. And it was same paying about $24 combined per contract. So you're looking for 2.5 pennies away from 295.
Yeah.
And, man, we got a 5 to 6 penny move within 6 seconds. And we also said, right, you were kind of looking for it to go down.
That's correct.
So if you get a jump to the positive side, you'd be glad to maybe take at least all your money off, if not make. And you actually doubled already.
Right.
You know, each combined, just to go over exactly, because it gets complicated with two contracts, you know, in your head. But both contracts combined cost you $24.
Right.
2.4 pennies. Anything above to the positive side or below 2.4 pennies, so like 297.4, you're breaking even, and you were just able to close it out at, and we'll pull it up maybe at the break, but I believe it was about 3.
Right. So you double our money already.
Right.
And I have the short side still on.
And you have the short side still
And what
on.
happened, folks, is we actually talked about this at the break.
Right.
Tommy asked me, I said, no, if you get the pop, sell it, period.
Yeah, especially to the upside, because maybe you're a little bit bearish. If you get a pop to the upside, look to sell the positive one and leave yourself exposure to the negative side. And, you know, you don't maybe necessarily think you have a reward to the negative side if it takes 5 or 10 minutes, but when you can literally close it out on that first like gap within like 15 seconds, there's a much bigger opportunity where that just disappears, as we've seen instantly, and you're back to, I mean, right now 2.99 to, you know, we're already 2 pennies off the high spike. We went aside at 301.86 and we're under 3, so that's 2 pennies right there. And here's the actual. So stockpiles are 78 billion cubic feet, and the median estimate was 88. So you got a 10 billion cubic feet miss. Yeah. And that'll
that's a
put
good number.
some fuel to the fire for sure. Trading right at $3, so it's nice. The click of the button worked out.
It did work
you know,
out.
And that's
you just doubled my money. I like that.
sent you during the break, what did I say, right? I said, I think you should put on one more contract because the premiums at 2.4 pennies, and it lined up right where it's just right next to 2.95. You're not overpaying a tremendous amount in the long term there, opening yourself up to a move either way right before EIA drops. 2.4 pennies is all you need. You know, worst case scenario, if you run that bad and you're that unfortunately unlucky, and it expires on the dot 2.95, it's still only $24 for both contracts.
I know.
And you know, you just doubled your money right there, and we'll see if it could maybe pick up.
Look at this. Here's the order history. We got
3.004.
How cool is that?
Yeah.
That's sick.
Yep. So you're looking at $54, and you put up 24. And you still have action. You know, over 100% profit on your investment. And guess what? In the span of 4 minutes, you know, you take that off and you get that spike.
Yeah.
You should, if you're making those trades, you should be watching that as that number's coming down, because that opportunity right there to get out immediately on that spike, it's huge.
It's huge.
And we literally have both up, We're ready. We know right where we're going to click because it's that quick.
Totally.